Hi, good afternoon. You're watching Closing Trades right here in ET Now with me, Aisha Faridi, Nikunj Dalmia on the show. And for the markets, well, we did make that attempt to claw back to that 19,500 print, a failed one at that, because from there we fizzled out, and we fizzled out quite considerably. So we're now at 19,400 thereabouts, and it's a fall of a good 150 points nearabouts from the high point of the day. So what's putting pressure? It's clearly key heavies like an L&T and Reliance, which are dragging the index lower. So it's a 1% cut that you're seeing on Reliance. L&T as well has fallen 1%. HDFC Bank has literally been a no-go, but that also has dragged another 0.6%. There's Bharti, which I can see is in the red. And then, of course, there are some of the metal names like a Hindalco, Tata Steel as well, which are weighing heavy on the markets as we speak right now. What's happening, though, at the broad end of the market? That, of course, is a lot better than what you're seeing within the frontliners. But if you just map the Nifty advanced decline ratio, that's pretty much split and divided. Yes, the gainers are taking a leap in terms of what the declines are up to, but you're not really seeing a significant move there. So it's really pretty much in a no man's land. Let's see what the last 1 hour of trade actually throws up at us and where we take it from there, whether it's going to be for the greens or for the reds. So that's pretty much it when it comes to the market texture. In terms of individual stocks, it's the usual suspects. JMR Infrastructure, of course, is galloping up. It's a 10% move, no less, on JMR Infra as we speak right now. There's Coforge, which is holding higher by about 9% after the PE exit. Mphasis, Coromandel, Siemens. Again, an interesting mix of trends there. And largely, it's the block names which are actually holding up. Nikunj.
Aisha, look, while there's a neat summary of where the market action is, I'd just like to bring out the very basic texture of the market. Again, when it appeared in the morning that you were motoring to the upper end of the range, you've been pushed back again. And ditto, I think, applies for the bank Nifty as well. Ditto, I think, applies really for some of the stocks which were hopeful in terms of taking the markets higher. For me, I think there are two stocks which, I won't say they're a problem, but two stocks which are just not showing any follow-up buying despite news. One is Reliance. Block deal, Jio Financials, stake sale, and where is Reliance? Just gliding below 2,500. And HDFC Bank, I was reading flashes in terms of the growth, what they're talking about, in terms of the communication. I think I saw a flash in terms of a credit growth where they're thinking this is official comment from HDFC Bank, and the market has no reaction whatsoever. And the third one, I won't use the word mystery because this, we told you so, is Jio Financials. And another circuit down. So that makes it now fourth circuit, and the number of sellers on the lower circuit, I think that runs into crores. So that just tells you, how this stock actually has moved ever since it's gone public. And you rightly said those block deals, whether it is Coforge or whether it is Manappuram or whether it is what's happening in Max Financial. So block deal stocks, I think, are the dominant one. So Kunal, I think, in the morning you have to toss the coin, right? It's actually like this. Just when it appeared that we will break down, the bounce comes. Just when it appears we will break out, the selling comes. We are going back to that range, right? You have to use the word range, to describe it. Is becoming like this.
It's not even that much of a range. It's range.
It's range. Yeah, it's a very narrow range.
Okay, range in a long time.
Yeah.
Time is the one you have to stretch yourself.
But yeah, I think that's where trading becomes all the more critical as well as difficult in these times, especially if you're an index trader. And I think adding to the point which you guys were highlighting, I think today you're seeing a lot of those flashy mid-cap stocks moving up higher by 8%, 10%, and that generally is a sign where I would believe that there's a lot of frothiness which is actually creeping in the markets, and I think that's something which I would believe could be a sign that the markets may be going through should be going through a lot of pressure going forward. The two levels which we've been indicating earlier, that 90,550 on closing basis could be a breakout point for the Nifty. We've not given a breakout except for an intraday up move about the 19,550 mark today. So if we happen to close below 19,400 levels, I would probably expect that this could be a decisive case of a breakdown on the index, on the Nifty specifically. And for the bank Nifty, I would still go into a no trade stance, and my expectation is that till the time we don't break below 44,000 mark, bank Nifty remains to be in neutral territory.
Okay. Naresh, hi, afternoon. What trends are you picking up in this lull market?
So the view remains same. 19,400 is where you buy with a stop loss at 19,300. 19,600 almost got reached today. That is the point of time where you want to book some profits. The momentum comes about 19,600. We went to 19,550, 580 levels in the morning. So clearly the range has got established and it's a very clear 300 pointer range. So till the time we are in that range, we'll continue to see this flip-flop moves. Once we get out of this range, we get a 300, 400 pointer directional move. But the fact is over the last 3 sessions, we've hit 3 new all-time highs on the small cap index, the mid cap index. So the broader market stock specific action continues to be decent. So in this case, we wait for further price action beyond 19,600 to become more bullish, or below 19,250, 300 to change the stance to a short-term bearish view. In the middle, all you have to do is be stock specific.
Siddharth Kemka, good afternoon. What is good and what is bad about the afternoon today?
So if you look at, I think market, as you were discussing, is stuck in a range. When you think it is likely to go up, it starts falling down. And when you think it will go down, break down, and all the bears start attacking, it starts moving up, so strength. And if you look at global cues, they have been pretty mixed. On the domestic front, although things have been pretty stable, but there is an increasing concern on the inflation, which even the RBI highlighted in its policy meet, post-policy meet commentary. We're seeing how food inflation has inched up and is kind of creating some impact. Crude oil prices have inched up now because of the stimulus in China. Some of the metal and commodity stocks, commodity prices have also started going up. So the entire benefit in Q1 that we saw because of a large benefit out of the margin expansion due to the soft raw material prices, I think that is a concern that the market is having right now. And that is stopping the market from taking any strong upside from current levels.
Right. Just looking at some of the other trends as well in the market, of course, while tomorrow is going to be the all-important Jackson Hole event, which is currently underway, and tomorrow you'll have Jerome Powell's commentary as well coming in. But right now, the global construct is looking pretty okay. I mean, be it Asia, in fact, Asia has closed in with some stupendous gains. It's a 2% move that you had in Hong Kong. China as well was marginally in the green, 0.5% across the periphery markets as well. Europe too has had a very strong start. And in the pre-market trades, you've got a big move coming in the NASDAQ, digesting NVIDIA's numbers, which were ahead of what the street was anticipating and which came in only post-market close yesterday. S&P futures, as well as I look at it right now, that's standing tall by about almost 0.6%. So there doesn't seem to be anything alarming, Nikunj, when it comes to the global construct. We are the ones who are just getting stalled right here.
So Aisha, really depending on, today NVIDIA is going to be having an impact on the way markets would move, because its expectations were large, but on large expectations, if you manage to beat that, just tells you that how strong this entire AI stroke, that entire chip business is. I mean, it's a large company, $1 trillion company, last of the $1 trillion company which has come out with numbers, and they've managed to get out of the park. So today I think would be a function of NVIDIA. Then is Jackson Hole, and depending on what the Fed governor wants to talk about, I think he would be using the forum there, whether he wants to talk about short term, where the outlook for US economies change, where he wants to talk about medium term, where he'll have to talk about whether they'll stick to the 2% inflation guidance or not. So Jackson Hole historically is important. I don't think it will be just one of those events which will come and go. Just like Reliance AGM, whether we may believe it or we may not believe it, it is something which is of immense market importance. I think Jackson Hole, not that anybody expecting anything large, but in terms of a narrative, that narrative comes out. What if Fed says that, okay, we'll change our 2% inflation target? What if Fed says that, look, we were bearish about the growth, now growth seems to be making a comeback? That just will set the tone in terms of where the near term is headed, and that will have impact on flows. That's how I look at it.
Yeah, absolutely. So are you finding pockets of exuberance in the market? We were just looking at the texture of names which are holding up today. I mean, a GMR Infra, for instance, Coromandel, etc. A lot of these two-digit stocks are the ones which are springing up in trade. We were talking about the power sector, and I mean, even names like Ratan India Power, which is, I think, in single-digit denomination, that also is seeing, some upper circuits in trade. What are you making of whether or not there is froth building up in individual pockets in the market?
Yeah, Aisha, so I think that what you're saying currently definitely makes sense, because because of lack of opportunities in the large cap, the mid cap and small caps have started participating. Definitely, some of them have that value in them because of the good earnings growth that they are projecting, or because of the overall economic growth that is helping. So, for example, if you look at power sector, there is a definite increase in the power demand, and power demand has definitely increased. And you see some of these utilities having an order book, some of the ancillary to power companies, they are getting order book, and on back of that, there is an increased, you can say, euphoria with these kind of stocks. Most of these core economic sector companies are on the PSU side, and we have known that these PSUs have not participated in the market for the last several years, and hence there is some kind of value which is emerging. So maybe an NTPC, a Power Grid, or the REC, PFCs of the world, which are a play on the power sector where the demand has improved. Now, whether some of these companies definitely would provide that growth in the numbers, some of them would, in the case of an NTPC, where we definitely see increasing utilization levels, the increasing pricing, helping them improve the overall business trend. But some of the other names we don't have coverage, like the GMRs of the world or some other names, where there could be, say for example, Ratan India, where the exuberance is taking hold and people are comparing these companies' valuations with the one which do have some value or quality. So definitely, I think there is some fraud building up in the broader market, but it doesn't look like a broad-based fraud in the market. As I said, some of these stocks, they do have value. They are not participated. They were deeply undervalued, and now market is finding some value in them. So I think some of these, especially in the public sector stocks, they could continue to do well on back of strong order book, strong demand, and growth in the business.
Nuresh, I'm just going to shift and talk about GMR Airports. It's a liquid stock, Nuresh. It's a large stock. It's a stock which typically HNI investors and traders, they feed on. It's up 10% today. It was up, I think, 10% yesterday. That makes it 65 and 20% in 2 days. Is the stock headed towards 75, 80 or even beyond that?
So in such a momentum, it's tough to take a call where it will pause. Before this momentum, the stock used to be at 40 levels for almost 1.5 years. It would go to 45, again back to 35, finally broke out after 1.5 years of consolidation. And now it has gone up to almost 75, 65 plus levels. So the problem is, in such a case, all you can do is keep a trailing stop loss and write down to the position. Cannot buy new at these levels when it has moved up 30% very quickly. So out here, momentum is too much. Tough to take a call where it will pause. The trend is still positive. Volumes have been decent enough in this move. And if we go back to earlier highs back in 2008 to 10, it used to be 80, 100. So it would be tough to cross 80 odd levels easily.
Okay, on that note, let's slip into a very quick break. GMR Airports, of course, is one high flyer today, as is Coforge, Mphasis. But we'll discuss the market trends when we come back.
And we're gliding down. 19,400 is going to be tested. And we are looking at the bank Nifty holding in the green, but the Sensex and the Nifty have already touched and dipped below 19,400. So it's not turning out to be a session which we thought in the morning would be more green than red. And now suddenly markets have taken a complete U-turn. Nothing large in terms of a trend actually. I like to draw, however, everyone's attention to what's happening in the so-called new discovered space engineering space. I mean, that entire space engineering club has seen huge re-rating because of Chandrayaan. Siddharth Kemka, how realistic are the gains in some of the companies which have got business or presence in this entire space stroke rocket vertical? Stocks have gone up 50 to 100%, even though the upside could be minuscule. Is it a time to lock out of a BHEL or a Paras Defense or a Centrum Electronics? I mean, just about every company in that space has got re-rated because of the Chandrayaan mission.
So, Nikuj, if you look at the defense space has been in momentum not only because of the Chandrayaan effect, but in the past several months, we have seen the large order book that has flown to some of these Indian companies. The opportunity for the private sector in the defense has quite opened up in the last few years. And a special mention here is to the exports potential that has opened up. If you look at what the government has done is not only tied up with some of the foreign companies to make in India, but also do the technology transfer. And that is where the long-term, you can say the multi-year growth story for the defense comes into play. Chandrayaan, I think, is just one of the events which showcases the capabilities, or you can say technical capabilities of some of these companies. Definitely, there is not going to be so many space projects in India. There could be some opportunity from some of the global players where they can come and they can supply to them. But I think space is just a small portion of the overall opportunity. Defense, especially in an environment where we have seen some of the wars, some of the geopolitical issues, and India being in a sweet spot, being a neutral organization and a friendly nation to lot of these countries. So I think, yes, the stocks have run up. There could be some consolidation if you look at the valuations, but I definitely believe that there is definitely a long-term growth story for the Indian defense companies.
Right. Okay, that's the take coming in on some of the defense names. Of course, tomorrow is going to be an all-important day. You'll have the RBI MPC meeting minutes. That's going to be actually today. But tomorrow, Jerome Powell is going to be speaking at the Jackson Hole event. You'll have the ECB President Christine Lagarde's speech as well tomorrow. So that's going to be important. Back home, of course, when it comes to AGMs, you'll have Oro Pharma and InfoEdge AGM slotted. And of course, the other big event is going to be ticket sales, Nikunj, for 2023 World Cup is going to begin.
Yep, I really hope it's
not see you logging on to book my show.
I'm hoping that you will be able to get me some passes.
Yeah, right. Good one.
The silence after that. I'm accepting passes.
So am I.
No, it would be interesting, Aisha. I mean, next couple of months are going to be like cricket mania. And, just that we know that what cricket and what it means for India.
World Cup.
And it is World Cup. And if India goes to finals, imagine that it would really be the decade, the event of this, decade, so to speak. I heard a guest saying that, look, I bought into Zomato, and that was Rahul Chadha. I said, World Cup is coming. And history tells us that when World Cup is there, you'll be ordering more food, you'll be dining out. And if India reaches final, trust me, a good stock to buy really would be Zomato. The amount of dining ins and the amount of dining outs you would be doing, and the restaurants and the whole beverage sale and beer sale, hotels. I think this would be, so this really would be an exciting time, so to speak, because it really could be the event of the decade, so to speak, if India reach finals and wins the World Cup.
Absolutely. Siddharth, what are you betting on? And I'm not asking which cricket team, but hotels, hospitality, consumption aggregators, food aggregators like a Zomato, etc. They'll all be in demand.
Yeah, Aisha, I think this is entire space. We have seen not only the hotel space, which has seen a lot of improvement in the occupancy, but also in the average room rates, which has helped them almost 8-9 years that the cycle has improved for the hospitality space. But if you look at the food aggregators, we definitely like Zomato. We have a target price of 110. We believe post the excellent Q1 numbers where the company has turned profitable at PAT level, which is much ahead of its Q4 FY24 guidance. We believe that the company could see strong growth where the management is confident of achieving 40% plus organic growth. Even the Blinkit is kind of now seeing improvement. The company is expecting break even in Blinkit's EBITDA over the next 4 quarters, which is again much ahead of what the street was expecting. So definitely it's a space where it has seen a lot of disruption now going away. We have now seen where they are increasing the prices for delivery, and that directly flows into the profitability. So we believe that the long-term growth opportunity for Zomato is very strong, and we are expecting it to turn reported EBITDA basis positive by the 4th quarter of this year, which should result in a strong profitability going forward. For FY24, we have a PAT of 1.3 billion, and for next year, FY25, it should increase to 8 billion rupees. So hence, I think the momentum for Zomato should continue.
Okay. All right, now Rahul Chadha of Mira Asset Management on where he finds value in this market, why he's underweight on banks but continues to bet on hospital stocks.
I think things are on control. We've had strong execution on the infrastructure projects. The GST collections have been fairly robust. So somewhere that kind of provides a flow to the growth, that provides a flow to the market in this period of uncertainty. From corporate India, I think the feedback's been mixed. Banks is as good as ever. There are pockets which are doing exceedingly well, hotels, travel, etc. But consumption, particularly from retail perspective, is weak, and nobody is able to point a finger at what is the reason. Is it that the consumer is in shell because of inflation, etc.? But yeah, consumption's been a bit weaker.
But if that is the case, then why the banks are showing growth in the retail book?
So I think this is a question we all are asking. Is it unsecured loans? And to be fair, if you ask me what worries me, is this growth in unsecured loans over the last 5-7 years. And now everybody is kind of complacent about it. So one thing which would worry me about banks, and this is a space we've liked, is, look, are we going to see some of the delinquencies come through in unsecured loans? There seems to be a kind of an complacent attitude about it. We've seen RBI also come and talk about it. Hopefully regulators tighten more norms on this.
It's been quite a deviation from the pharma space with what we saw during COVID time, pre-COVID, etc. What's the outlook currently on pharma, particularly with the expensive valuations?
So if you see pharma space, the rally happened from late May, June, when there was this buzz that, look, pricing in US has improved. One thing which we guys have to watch out for over the next 6-9 months is the strong deflationary impulse coming from China. See, demand's kind of been very weak post this reopening. We've seen renminbi come under pressure as China writes a blank check for the property developers, local governments, etc. And our belief is that renminbi further weakens from here. As renminbi weakens from here, the Chinese corporates see less demand at home. A lot of that material is going to come in the export markets. So pharma story looks good for next couple of quarters, but beyond that I would be watchful, more so in terms of deflation which is coming from China.
You did speak about, consumption as being a bit of a weak link, and some of the inflationary concerns as well persisting. So what does one do then when it comes to the consumption space as a whole? What's the advice? I think
the idea here is to buy on dips. Right now one would be more predisposed towards consumer staples. They've got pricing power. And with this deflationary impulse which is coming, their RM costs will go down. We've already seen that in the last quarter. They've had 3 to 4 percentage points gross margin increase. The hope is ahead of the election, government gives some sops and you will see some demand momentum pick up. Discretionary, I think, is going to be long drawn recovery. May take more than what it takes for staples, but staples over discretionary here.
Now, Adani stocks are falling again. And they've started falling. Kunal, you don't track Adani stocks, right? No. Okay. Naresh, Adani stocks is just a pattern, but second day on the trot now they've fallen in the second half.
So it's been a case with them always volatile. The only places, like I've been saying, Adani Ports is still okay because that's a stock which came back above the January highs. Closer to 800, that becomes an interesting buy. But Adani Enterprises will continue to see volatility. So apart from Adani Ports and maybe Ambuja Cements on dips to 430, 440.
Right. Okay. That's the word coming in, and some of the Adani Group stocks hugely volatile off late. I mean, the last 2 trading sessions, they had a drop. Yesterday, they were on their way to recovery, and again falling today as well. Some of these mid-cap IT names actually continue to hold out. Even yesterday, you did have spots of green within the entire IT pack, or actually throughout this week. Today, of course, Coforge after the PE exit is actually holding up. There's Mphasis as well, which is looking smart. Amongst the large caps, I can see Mphasis, which is actually holding out. LTIM is not looking all that bad. Wipro as well, just about marginally higher as we speak. Naresh, any trends within mid-cap IT specifically?
So mid-cap IT has been relatively a better performer. Coforge today, after the block deal, has become interesting. The stock has again got into momentum. Persistent has been a relatively better performer, which looks the most interesting one. If you look at the chart, it was at 5,200 back in 2021, then in start of 2022, then closer to 5,000 again in March 23, as well as in June, July. And even now we are getting closer to that mark. So if it can sustain 5,200, that would be a breakout of the last 2 years, and that could create a move on the upside towards 6,000 also. So the most promising name which has been knocking at the same resistance for the last 2 years, wherein rest of the market, the rest of the IT names have been knocking at the lower end of the range. Persistent is the one which props up on our radar.
Right. Okay. Siddharth, great to have you on the show. We'll let you go on that note. Thanks as always for taking the time out. On that note, let's get some closing trades as well going. Kunal, what's on your list?
Well, that'll be a buy on IRCTC. That stock is coming back into the thick of a breakout above 660 mark, coming back into a flag pattern breakout. So would be interesting to buy IRCTC.
Okay, a buy on IRCTC. That's the closing idea from Kunal. Naresh, what about you?
So that would be IndusInd Bank. Very interesting formation here. We are back to the same range of 1425 to 1435, which has been the top for the last 1 month. And the stock is still at the same prices as it was pre-COVID. So could be a re-rating candidate going forward. If it sustains 1435, could be a move towards 1600.
Okay, let's slip into a very quick break on that note. But as we do that, our food expedition in Pune continues. And this time we're visiting Maratha Samrat, a restaurant which is known for its authentic Maharashtrian cuisine right in the heart of Pune. From wholesome thalis to appetizing starters, this place apparently is a must visit for all food lovers. So let's take a dig in.
We're here at Maratha Samrat for some authentic Maharashtrian food, and with me I have Chris from Seka, who's been in the Pune music scene for the past 3 decades, and this place is one of his most favorite restaurants for authentic Maharashtrian thalis. So Chris, tell me, why do you like Maratha Samrat?
We come here quite often actually to have the fish thali, which is fabulous, and the kala mutton thali, which is mutton which is cooked in a darker gravy with darker spices, so it has a sort of black look to it, but it tastes fabulous.
So should we get started?
सीफूड में स्टार्टर्स है, सुरमई है, पॉम्पलेट है, प्रॉन्स है.
ओके, तो अगर हमें थाली खाना हो तो आपके 2 सबसे रेकमेंडेड?
हमारा मटन थाली और सीफूड थाली जो है वो काफी फेमस है.
This is actually delicious. Like, I did not expect it to be so nice. But like the fish curry is so tangy.
Yeah.
Is that because of kokum or something?
Yeah. So they use kokum. This is the Malwani, more of the Malwani style fish curry. This is the pandra rasa.
Yeah. And how are you supposed to have this? With chapati or?
Yeah, you can have this. It's like a with the gravy or with the rice, which they'll give later.
So what do you like the most out of these?
I've tasted the curry, so that's everything is awesome. But I've tasted it before, so I like everything.
So tell me more about the food culture in the city. What kind of food do you get here? What's most popular?
So actually, Pune being a city with a lot of students, from all over the place. There are a whole lot of universities. We have the Pune University, obviously. Then we have the Symbiosis International University. Because of the huge variety of people which come in, I think our cuisine is really, there's a whole lot of different things to experiment, to try out, right from Japanese, Oriental, to different American burgers, continental places, fusion places. But the places which are really true to the city are places like this, where you get the Maharashtrian food or your local snacks. So in fact, in this area, there are a whole lot of legendary places which, like a bakery called Kayani Bakery, which then we have your Mazurin, which is there. There is a Garden Vada Pav. He's right over here.
Heard a lot about it.
Yeah, just behind, just 1 minute ago, 1 minute away. And this place, and then when you go to that side of town, then you in the middle of town, then you have your Bedekar Misal and all the lunch houses.
Yeah. So
all close.
How has the music scene evolved?
Actually, Pune's had a fabulous music scene, and
Yeah?
the thing is, and a lot of very good musicians have come out of Pune. There was a band back in the 70s called Waterfront, which toured the world. And two of their musicians are from Pune. They were based in Pune. From that time, so music has always had a great culture.
Okay.
A lot of our Pune musicians actually presently moved from here, playing in Bombay, in the Bollywood scene, in the studio scene, in the session scene. But having said that, they always come back, and we have these little homely sort of venues which everyone want to come back to and play because there's a known crowd, and people are happy to see their local acts playing.
So we're going to finish this meal, but thank you so much for joining us. It was a pleasure meeting you, and
likewise.
I'm so grateful that we came here. A proper slice of Pune.
Great.
Back with closing trades right here in ET now. Let's just revisit what the closing trades are up to because we're unable to really hold on to the gains, flattened out completely and now drifting in the red as well. So about to breach that 19,400 print. Under pressure, Reliance. It's fallen further now. It's down about almost 1.6%, and one would have thought after that QIA investment coming in into the retail segment of Reliance, one would perhaps have a soft flow to RL, but not quite. So after a bit of a firm start, it's drifted now again, backs up the 2,500 level in trade. Let's see what Jio Financial Services as well is up to because it's locked in down circuit once again. L&T too has fallen further, and now you're seeing some pressure from the metals pack too. So Hindalco, JSW Steel, Tata Steel, all these names are in the red as we speak. Further pressure for HDFC Bank, which has also fallen another 0.5%, and the Adani group of names as well are not quite supportive today. They too have turned tide. In fact, within the broader end of the market, there's also names like a Polycab, which is down about 2.5%, Manappuram, which is down 2.25%, Piramal Enterprise is down nearly 2% as we speak, and IDFC as well is weighing heavy, almost a 1.7% downtick coming in on IDFC, to 1.5% in the spot market. That said, just a few dots of green really. Asian Paints, IndusInd Bank, Mphasis, marginal green for an ICICI Bank, for an Axis. And then, of course, there are some of the midcap IT names, largely block names, and Indiabulls Housing, MFSL, GMR Airports. These are names which are actually holding out. Even GMR Airports has come off from the top of the day. It's no more than 10% gain that you're currently sitting on over there. Sunil Subramaniam joins in on the show right now. Sunil, hi, good afternoon. Welcome to ET Now. Just wanted to understand, where is it that you are seeing pockets of overvalue and undervalue in the market, if at all?
It's very hard to say, in terms of pockets. It's actually, I'm seeing that there's a lot of differentiation within sectors among companies. So I would say that it's largely the infra play. I would say that if you look at it from a classical earnings P ratio, is definitely looking rich in valuations because a lot of the price is from the order book and from the future growth, right? So that's one sector where I see. The other sector where I feel some value is creeping in is cement, because cement, I think, went through a pretty bad phase earlier, and there was a lot of negativity. And now I think the price correction and all what has happened there, now we are seeing value in cement actually, because we've always been bullish there, but I think there's some news of capacities and everything had led to a kind of a market feel that the earnings won't support. But that's, I think we feel that now that's a bit undervalued. Within the BFSI pack, again, if you see PSU are still continuing to show in a discount, but I wouldn't call that undervaluation. I would say that there's always going to be a discount for the PSU versus the private sector banks. But I would say relatively the run up there means that their valuations are fairly okay now. They are not either undervalued or overvalued. Metals is a global cyclical. I would say that depending on the news abroad, right, the future earnings, because in metals, the pricing of London Metal Exchange, right, comes into play in terms of future earnings prediction, how that is. And there, if you look at the fact that a world slowdown is going to be coming sometime or the other, we feel that the projected earnings there could be under pressure. And so hence, some sense that it is overvalued a bit.
What role do you think in terms of the policy action we are likely to hear from Fed now? Because that in a sense will be the decider for the second half. The fear of recession has now is now history, and from recession we are now talking about growth coming back.
Absolutely. And I think the Fed's talk also reveals that, because see, inflation is still not at their comfort levels of 2%. And the only reason for them to ease off on a rate hike to control inflation would be if growth was slowing down, and hence the balance between the trade-off between growth and inflation coming into play. However, with the growth numbers coming strong, Nikunj, the Fed is likely to stamp down even more in terms of doing rate hikes, because in the coming year, it's an election year, right? And I think the inflation has far greater importance in politicians' minds than does growth. And hence the gentle nudge from the president and his cohorts would be towards making sure you bring inflation down in an election year. So I think that to that extent, I would say I would expect the Fed to continue tough speak, say the right things about we will do everything in our power to bring down inflation. How much that translates into actual rate hikes? Lots of time Fed we've seen right from the good old days of Greenspan and Bernstein that they try to talk down stuff rather than act on stuff. So I expect a lot of hawkish tone to continue on the Feds. Will translate into at least one rate hike, but whether that translates to 2 or 3, I think we'll have to wait and see how the data actually pans out.
Sunil, you've really taking the clock back, my friend. Alan Greenspan, I think there was a Janet Yellen in between, and there was Mr. Bernanke. You've taken the phrase back to Paul Volcker 1980s. You've been tracking Fed from 1980s.
Absolutely. Naturally.
I've only read in textbooks. I mean, the Paul Volcker Reagan era, what was supposed to be like this really good era where they went hard on inflation. But meanwhile, Nuresh, 19,400 on the Nifty is gone. Is there a significance of that? Are we in for some kind of a trend fall now?
So we are right at the same place where we started off in the morning. So the view is same, 19,300, 19,250. Only when it breaks, you change the view. Hold on to the positions bought at 19,400. You have a 100-pointer stop loss. You almost got a target at 19,600, which was the first one. It's above 19,600, you become bullish. Above in a major way, and below 19,250, you become bearish. So for now, we are in the range. Stick on to the range. View remains the same.
Okay, Kunal, we were talking about consumer tech stocks in the morning, and yesterday what looked like a good Wednesday for Paytm, it's turning out to be a volatile Thursday. Where is Paytm headed? I mean, we've not spoken about it in a while. I think it was on your call in the morning, right? Okay, where is that stock headed?
Yeah, it's still flattish today, but then the long-term charts are very, very attractive for Paytm. And by long-term, I mean at least over the last 7-8 months, we've seen a decisive change of trend for Paytm. I think 2022 end, the stock made a low which was 545 odd mark. And from there, it's managed to move up exceedingly well, gradual manner of uptrend, not a spiky move which which is coming to the stock price. There was a very sharp up move in the month of June for Paytm when it moved from I think 720 to 900. But then post that, the stock went into a 1.5 or 2 months of consolidation. Yesterday was the first sign that the stock is coming out of this 1.5 or 2 month of consolidation. Good volumes which you've seen yesterday. Even though today the stock has ebbed off from intraday highs of 930, but I would still believe that with volumes making a strong comeback over the last 2 days, yesterday and today as well, this could be a decisive move for Paytm coming out of consolidation. So bullish on the stock and expecting the stock to come back to that 4-digit mark pretty quickly.
Okay, that's the take coming in on Paytm. Let's see what Reliance is up to, because anticipation and expectation is running high ahead of its AGM come next week on the 28th. The stock has slumped almost about 2% right now, 24.77 on this one. But let's quickly take it across to Sharad, find out what the dealing room chatter is and what stocks are propping up there. Sharad?
Well, yes, in focus, we're having Rallis India, and what we are hearing from the dealers is there's certain buying coming from the counters in the HNI segment. Apart from this, also looking at the volumes, it's coming at almost 7 times its 20-day average, and the stock has risen its highest levels seen over the last 7 months. Now, of course, the street buzz is that the weaker monsoon is there, and because of that, this might actually spur the demand for crop protection, and this is why the stock might be rallying. Apart from this, also the company, if you look at it, Ace Investor, Rekha Rakesh Junjunwala has also almost 7.75% stake in the company. And recently the company came out with its Q1 numbers, which were largely above estimates because of increase in the margins. But there was a muted outlook coming, especially for the international business, and they've stated that the pricing pressure that is likely to persist for the export business, and also the turnaround or the increase in volumes is expected from the second half of FY24. But for the domestic business itself, what our channel checks are suggesting is a higher channel inventory that is expected to come off because of the conditions currently.
We've got a bit of a mumbo jumbo happening in terms of the Nifty. Okay. There you can actually draw a line which just tells you that the selling only has intensified. Sunil, markets will not go up in a straight line, not will they go down in a straight line. But there are a lot of stocks which have only gone up. Defense, railways, space stocks. I mean space, that entire cohort. If markets have to correct, where do you think the decline would come from? And where do you think you would like to buy that decline in terms of finding value?
So I would say that the decline would come from international related sectors, number one, because that's where the news is very confusing, whether it's a hard slowdown or a soft recession, the rate hikes. Anything international related. So IT, pharma, metals, global cyclicals, energy, all of these would be the ones where you would see rapid rises and falls. So I would say that if something has gone up very rapidly recently, that's where, because they are news flow related to a lot and less fundamental related in terms of what actual quarter-on-quarter numbers are coming in, right? So I would expect there to see an extreme degree of volatility. The other place where one has to be a bit wary is that we've seen this, I think I referred to in the answer to the previous question also, that in the infra-related pack, we've seen the whole story of government-driven infra, the PLI, the greenfield capex happening because capacity is rising. And we've seen a whole lot of across the board rises happening there because of anticipation that this will, and these are extremely cyclical sectors. So in the times when they were bad, they fell very sharply, and market is now reading into a very rosy future, right? And where is that seen? It's seen in expected order books, which will translate into order books and then into EPSs in the future. And these are typically high operationally leveraged. So high interest, high depreciation costs, which are fixed costs. So you will see a lot of, so there you will find there may be quite a few surprises where market overran itself. And the other way surprises where the market didn't anticipate the kind of V-shaped recovery that would happen in their EPS. So I think that whole infra-related pack here, I think would be susceptible to these kind of high volatility, sharp ups and sharp downs is what I would. So hence to remain wary about taking shorter term play exposures in these kind of spaces and take only something like if you're committed like over 3 to 5 years, you will ride this volatility, then you hang on to that space.
No. What do we have? Bit of a linear decline. Metals are down, steel is down, commodity consumers are down, pharma is down, auto is down. Naresh, the auto space has been rusty. I mean, till about Jan. Sunil, why are you laughing?
Because you said linear down, and the things
intraday trader, Sunil, intraday trader. You're talking about intraday.
From a long-term buyer, growth buyer to an intraday move and connected the two. So that's why I got a smile on my face.
I have to do my job of addressing both the constituencies. Please appreciate that, Sunil. You don't take it seriously. Okay. Enough of workplay. By the way, Sunil, thank you for the speech. We all really, enjoyed it. Thank you very much.
Thank you.
Okay, Kunal, linear decline if you're an intraday trader.
Yeah, it's a decline for the index, but I think we've not yet confirmed a breakdown below the 94 mark closing base. Hopefully, we'll wait for another 10 minutes. If we manage to do it,
market will shut in 10 minutes.
Yeah, that's what.
9 minutes will shut. What will you wait for?
But then, if we recover another 20 points, then we are back about 9400 mark. Then we are back into that yo-yo kind of a market. One of the trends which I'm picking up on the index is the 50-day moving average. And over the last 12 months, there have been 3 times when the index has started to trend significantly below and above the 50-day moving average. We are at a touch and go moment towards the 50 DMA. 19364, I think, is the 50 DMA for the Nifty. we made a low of 19,369. So that's the important trigger which I would believe in terms of next level to be watched out for.
But would you go home with a short position?
Yes.
On the Nifty?
Yes, I'm carrying the shorts.
Naresh, would you carry their short positions if you have any?
There would be the long position initiated at 19,350, 400, keep a stop loss below 19,300. And that's the view. Let it clean out the exact price points where it was making a bottom and a top. Till that point of time, you stick to the position, stick to the discipline.
Sunil, now the obvious question, which is that if I look at autos have done rather well this year, starting from an Ashok Leyland to an Escorts. But if I look at the auto sales, passenger cars are growing in 4 to 6%. Keep SUV aside. Two-wheelers are just not growing. Tractors are growing. And with the exception of Eicher, nothing has reported double-digit growth. What is this excitement in auto all about?
Excitement auto is on the margin rather than on the top line. All the numbers that you mentioned are top line related in terms of sales. So I think what auto has been through is an extremely lot of pain on the margin front from those input costs impacts, from the fact that sales were below break even during the COVID periods, right? And hence there was severe impact on their earnings. What you're seeing is a normalization breakout, right? As things are getting normal and commodity prices are easing and their input costs are easing and some prices increases have happened. So what you talk about is in numbers is the quantity aspect, but there's a price into quantity even on the top line. So I think price increases have happened and there are cyclical pockets like you mentioned about tractors along with that HCVs, LCVs, right? With an expectation of the recovery in the capex cycle, right? Logistics and this will see a big boost. So what you're trying now seeing is that the auto pack, right? It's not merely to look at the sales quantities, but if you overall, I see that it's quite a sweet spot. The only negative, if I say apprehension there is in the auto component space, which is largely export driven. And if internationally there's a slowdown, then clearly you can expect an export slowdown. So leave that pocket aside. And of course, tractors are monsoon related. So to that extent, there will be variability there. But otherwise, on the commercial vehicle side, I'm pretty bullish in terms of the expectation for pickup. Election year coming. So again, huge number of SUVs and Jeeps and all of that will be in heavy demand. So you'll see good spike up in those numbers there. And let's also bear in mind that despite the rate hikes,
Sunil, modern
EMIs
times
having gone up haven't affected that demand that much.
Sunil, modern times, most of the campaigning is done on WhatsApp and digital these days. Forget Jeeps and tractors and autos. Modern times.
You haven't seen Godrej, it looks like. Screens are
I haven't
back.
seen actually.
Real Bharat and Real India is not WhatsApp so much. There's real ground level development. Please go see Godrej.
No, actually, I haven't seen that. Aisha, have you?
No.
Kunal?
But I did attempt watching Godrej one, thanks to Kunal's recommendation.
I saw one and I haven't seen
tried. And then
I saw one
into the movie I stopped.
I saw first and after they decided not to watch two. That's me for you.
The minute the hand pump scene came, I was like, that's it.
You can't understand Real India until you see Godrej and see why it's such a big craze and a hit. Because that's the emotion of the Real Indian coming. Not all of us sitting here, digital, WhatsApps, all these, we are all poncho veggies. But the Real India guy there, he's the one who's going to vote in the election and his thought process comes through in this.
By the way, Sunil, really on a lighter note, the biggest hit this year globally, Super Mario. I don't know what to make out of that as a trend. Naresh, you are very quiet.
So I haven't got a time to watch a movie. Could only manage to go for Oppenheimer.
क्या कर रहे हो यार नरेश? इतना 3:30 बजे मार्केट तो बंद हो जाता है. You were off yesterday. You had full day yesterday. You were off yesterday. You had a full day.
Tough times.
Kunal, did you manage Godrej too?
No, not yet.
No? Die-hard fan you hasn't.
All right, 3 minutes to go. What do we have? The market is set to close at the lowest point of the day, almost at the lowest point of the day. Don't read too much into it. I think you need to see perhaps more shakeout to realize trend has reversed. These are just give and take which are currently happening in the market. So Naresh, next 2 days are important because you'll hear from the Fed. So what should one do if somebody is a positional trader?
So the sizing should be a little lower if you're an index trader. Stock specific, continue to hold on the positions. You'll come to know on Monday whether you get stopped out or the trend continues.
Right, okay. Let's get in some BTST trades as well going as we are just counting down minutes into close. Kunal, what's on your list?
So I'll go with a mix of one buy and one sell. The first one is about TVS Motors. Looks attractive for a target of 1430, stop loss at 1350. And India Cement has actually given a breakdown on the charts short term. So would suggest a sell, targets of 229, stop loss 240.
Right. Naresh, what about your BTST ideas?
So first would be a buy on IndusInd Bank close to a 52-week high, stop loss at 1410, target price of 1450. Second is a buy on Indian Hotels near a 52-week highs again, stop loss at 397, target price of 415.
Okay, let's begin winding up for the day then. Of course, tomorrow, like we've been pointing out, couple of important cues. Today, you'll have the RPI MPC meeting minutes as well, which are going to be disclosed. Tomorrow, of course, is the big one wherein Powell is going to be speaking at the Jackson Hole event. That's something we're going to only digest on Monday morning, unfortunately. And ECB President Christine Lagarde as well is going to be speaking. Two AGMs, InfoEdge as well as Oro Pharma. And then, of course, the ticket sales for ICC World Cup 2023 as well are going to begin tomorrow. So I guess all of us are going to be counting down to that. And Sirma SGS, the lock-in as well opens on that 24% of shares. So this is going to be an important stock to look out for. Today, of course, has been a bit of a disappointment considering we were just that close to that 19,500 print. And from there, we've tumbled almost 1.5%, 19,383. So once again, sub the 19,400 level is where we're shutting shop for the day. Similar was the price action across banks, even though they started off the day with the continuation of the recovery from yesterday, but gave in towards close and closing in absolutely flat for the Nifty Bank, just a 7-point off an uptick coming in. In terms of some of the other movers, Reliance, of course, has had a due hand today in the drag on the market. It's closed in at the session lows, 39 points lower on the futures, 24.89 and 24.75 on the spot is where RIL shut shop. Metals as well was quite the weak link today with Hindalco, Tata Steel, JSW as well. They were all laggards in trade, as was LNT, which was down about over 1% in trade today. Handful of gainers, let's mark that as well. So an Asian Paints, BPCL, IndusInd Bank, Mphasis, ICICI Bank and Axis managed to hold out in the green, as was the case with Indiabulls Housing Finance, MFSL, Mphasis, Coforge, and then GMR Airports, which has been skyrocketing off late. That held out another 9.5% in the session today as well. From within the broader market contenders, the Piramal Enterprises, of course, saw a sharp cool off. That stock fell about almost 2%. There was IDFC, which as well closed lower. Manappuram and Polycab were some of the rank underperformers. So yeah, disappointing day today considering we were just that close to that 19,500 print. So let's see what tomorrow has in store for us.